Traders, how are you? Marcello here, founder of the Day Trading Academy. Today we're doing the recap of what happened in the markets last week. So overall this week we had, some gyrations in the stock market, but more than anything, what really identified or defined the week was the increase of tensions with the trade war between Trump, or I should say the United States and China. On Friday, the Chinese imposed more tariffs on the United States. In retaliation, Trump then retaliated with more tariffs on the products that are coming in from China. We saw a 2.3% decrease in the Dow, which was over 600 points. The S&P 500 went down by 2.5%. The NASDAQ also 3% and went back well below 26,000. And now Trump is ordering companies to leave China and change their supply chain. So now we're having a situation where it's not only an escalation of a trade war, but now Trump is now trying to change supply chains and productions, because obviously China, one of the things that they rely on are the production of these companies in China. And if the US companies pull all their production, that's going to cause a very significant decrease in not only jobs, but also the economy in China as well. So that was the main thing that happened overall this week. Don't forget also that we do have the podcast available on the website, or even iTunes or Stitcher, wherever you guys want to find it. If you go to the website on the blog as well, you guys can download it from there if you guys want to listen to the recaps every week instead of watching them on YouTube. Now, one of the things that also is starting to happen as well is the tax cuts that the Trump administration provided in 2017. That more than anything, it provided a lot of businesses with cash. S&P 500 firms responded by buying record amounts of their own stock, which obviously if they bought record amounts, that helps the stock market go up, especially in those specific stock markets. So now the S&P 500, the buybacks in the quarter two of 2019 are starting to slow, and in quarter two we had a 13% decline from the same period a year ago. So that's going to put some down pressure on the stock market as well. Overall for the week, the US indices, Dow was down 1.01%, the S&P 500 went down 1.44%, and the NASDAQ went down 1.86%. In overseas market news, the European markets were mostly mixed. The London FTSE was the biggest loser at 0.31%, and the two big winners in the European markets, Istanbul, which is Turkey, one of the biggest winners, the second highest actually, 1.48%, and then Russia was up 1.76%. Latin American markets are mixed as well. The biggest winner was the Mexican exchange at 3.34%, and then the Merval in Argentina went down by 14.36%. In Africa and Middle Eastern markets, Nigeria, the largest economy in Africa, went up by 3.25%, while Saudi Arabia, the biggest loser, went down at 1.23%. And the Asia and Australian markets, the Chinese SEC was the biggest winner at 2.58%. The Sensex in India went down by 1.77%. And a huge shout out to all our traders in the Philippines taking the master class course, learning how to trade futures. The exchange in the Philippines went down by 1.19%. Bitcoin went up for the week 3.73%. Not a lot of big news in Bitcoin this week, and it ended at about 10,438. Newsflash, still hasn't gotten to 50,000 yet. Cost of insuring, financial and banking news, the cost of insuring against an Argentine sovereign default rose substantially on Monday after the opposition candidate Alberto Fernandez, which is the president, the runner-up, or I should say the person running to try to beat the actual president at the moment, which is Macri, said that they would struggle to repay the $57 billion loan that they took out from the IMF in 2018. So that's putting some people on edge. IMF also is warning governments it's advising governments that are weakening their currencies through monetary easing and market interventions that they're arguing that it's hurting the functioning international monetary system, and it could actually make all nations worse off. About 30% of global bonds now are being traded in negative territory, which is a record high and also likely unsustainable situation in the long run, especially for the financial and banking sectors. And the U.S. federal government is going to rack up $12.2 trillion in deficits through 2029. That's from a report that's saying the Congressional Budget Office. It's an $809 billion increase from the last projection in May. Now, that is going to boost the debt held by public by 95% of GDP, and it's the highest since the World War, just after the World War II. Commodities this week, oil is down 1.37 for U.S. crude at $54.17. International Brent is up 0.29% at $58.87. Oil, remember, is still down over 7% this month of August. OPEC's share of the global oil market has shrunk to about 30% from its peak of 35% in 2012. More than anything because of the supply restraints and the involuntary losses from Iran and Venezuela. There's little sign also that OPEC is wavering on their output cut strategy, and oil dipped by more than $75 in April to about $60 so far now a barrel. Russian President Putin is running a budget balances the budget at about $49 per barrel, which is the lowest crude price in more than a decade. He's doing that because he's worried about more sanctions from the U.S. and a possible repeat of 2009, where the GDP in Russia fell by nearly 8%. The U.S. is now the only U.S. rare earth mine is on a hiring spree as he's looking to significantly boost production. If you guys don't know, a lot of if you guys don't know about these metals, I mentioned these to you in another recap, but essentially they're very rare metals that come from Earth, or even more rare than gold and silver, for example. And the majority of the metals in the world the biggest share comes from China. Now China has placed tariffs because of the trade war on these products. So now the U.S. is looking to ramp up their own production so they don't have to source a lot of these metals that go into military parts, for example, and other important things. So they don't have to source it directly from China. After demand growth of 9% in the first half of 2019, jewelers in India are now dealing with record high prices, which are up 17% this year and pushing demand down to about 666 tons. India is the second largest market for gold after China. And now this may drag the annual gold sales to the lowest level in 3 years due to the taxes in India, the record prices, and also the slow economic growth. I should say the slowing economic growth in India. Central banks bought 371 tons of gold during the first half of 2019, highest increase in nearly 20 years, with the biggest buyers being Russia and China. And central bankers globally are seen to be preparing of a new norm of negative interest rates and further financial instability. I always tell you guys, first, obviously, I'm never going to get political. So it doesn't matter if you love or hate Trump or love or hate Obama. When I do these videos, I want you guys to learn. So I'm not going to get political. I'm just going to present with the facts to you, right? And second, I always told you guys, I try to do these videos to be able to teach you how to read through the lines, right? So it's one of the reasons why I don't recommend the news is because most of the news, whether it's on the right or the left, always tells you the opinion of what they want. For example, they said Brexit was not going to happen, Brexit won. They said that Trump was not going to win, Trump won. And so there's a lot of fake news that occurs in all of the news outlets. So one of the things that I want you guys to keep in mind of is don't pay attention to what the news says, pay attention to what people are doing, especially important people. And the reason why I tell you guys this is because if the largest central banks in the world are buying gold, what does that tell you? And especially if they're buying it at a record pace now. Precious metals are higher for the week, 0.99% for gold at 1,527. Silver went up by 1,000. Silver went up by 1.92% at 1,750. And in political news, German Chancellor Merkel says that the UK and the EU could find a solution to the Irish backstop in the next 30 days, which is a possible move that presents that they may be willing to negotiate or compromise with the new Prime Minister Boris Johnson. In economic news, Germany's central bank warns that the country may be slipping into a recession after the growth fell to just 0.1% in quarter two. They're stating that there's probably going to be a lackluster quarter three in 2009 as well, and predicting that the GDP could continue to fall slightly. One of the things that's affecting, obviously, the the German economy as the weak global auto sales have hit the German car makers, which you guys know are very, very big in the world. Italy's debt to GDP ratio tops 131%, the highest ratio in Europe outside of Greece. Now, the ruling Italian coalition populist government is continuing to overshoot the 3% deficit, meaning that in the Eurozone, if you guys remember the spat that the Europeans had with the Italian government where they're supposed to be limited of not having a deficit of more than 3%. If you guys don't know what a deficit is, it's basically spending more than they take in. So it's like a credit card. If you make, let's say, $5,000 a month, 3% of that would be $550, would be $150 a month. Now we're talking about billions of dollars with the government, right? But they're basically overshooting their budget every month over month, and they have one of the highest GDP to ratios, not only in Europe but in the world as well. Some economists believe that the U.S. manufacturing sector is already in a recession, and they're saying that other parts of the economy are going to need to compensate for that more than anything. The energy and consumer retail sector and the Eurozone factory activity contracted for the 7th month in a row, and the GDP is seen as only rising between 0.1 to 0.2%. In corporate news, the Italian media says merger between the Fiat, Chrysler, and Renault may still happen. To achieve that, the French government may have its interest in Nissan, convincing the Japanese firm to accept the alliance and joining the FCA group. Alibaba is delaying its $15 billion listing in Hong Kong to gather more cash. Obviously, this is due to the fact that they have the protests and the political unrest, which is going on 12 weeks in a row now in the financial hub of East Asia. Walmart is suing Tesla over the solar panels that caught fire in 7 of its stores. It underscores the familial ties between Tesla and SolarCity and results a flawed merger that produced shoddy craftsmanship. Tesla acquired SolarCity in 2016 by $2.6 billion, and many see it as actually a bailout for Elon Musk because he's the biggest shareholder in both Tesla and SolarCity. In trade news, Japan's politically sensitive trade surplus with the U.S. grew by more than 15% in July, from a year ago, I should say. There's a monthly gain of $5.5 billion for the 5th consecutive months as negotiations start to restart talks over the free trade deal. And Japanese and American negotiators are going to attempt to compromise on beef and car exports to conclude a trade deal by September, as Trump does need a deal with tangible benefits to be able to get the election. Obviously, we have re-elections in 2020. He's going to need those benefits for U.S. farmers to be able to go and get the re-election. In technology, social media site YouTube disabled content due to the Hong Kong protests, found in 210 video channels that were trying to coordinate misinformation. They found that they were using VPNs to try to hide their original origin, and it follows similar China-related actions by Twitter and Facebook earlier this week. Germany is capable, they're saying, of investing $55.5 billion in an economic crisis in a potential interventions, fiscal stimulus if necessary, as the Q2 growth was slightly negative. And it also says that the government would, of course, need to suspend its budget balance policy that is now running a surplus. So if you guys don't know, Germany is actually one of the only countries in the world that's actually decreasing its federal debt. They've gone from somewhere along the 70 to 80% range down to about 50-ish%. And they're doing that because they're anticipating the old age of their citizens and the extra costs that they're going to have to be able to take care of them. Amazon is raising seller fees by 3% on thousands of small and medium businesses in France due to the digital tax that France government approved against Amazon to be able to try and level the playing field between big tech and local French firms. One of the things that I find very funny is that everybody's going to continue to sell things on Amazon. Now it's going to charge them. Now they're going to cost them more, and they're going to get less money. So you can see how it works. The French government tries to help out the little guy, supposedly, right? And what ends up happening is the people selling already on these platforms, because it's the biggest in the world, end up receiving less money. And where does the government go? The bureaucrats in France. Funny how that works, right? Other than that, the U.S. extended a permit to allow Huawei to continue buying components from U.S. firms to supply existing customers, but also moved to add more than 40 of Huawei's units to its economic blacklist. In international events, I mentioned to you the Hong Kong protests were continuing for more than 12 weeks straight, and they also have no signs of weakening. Australia is going to join a U.S.-led naval coalition to be able to protect the shipping in the Persian Gulf as tensions mounted when Iran seized a British flag tanker in the Strait of Hormuz. They are going to contribute with defense planning and operations. About 15% of crude oil and 25 to 35% of refined oil passes through the Persian Gulf that goes to Australia. And the president of Iran, Hassan Rouhani, is threatening that if oil exports in Iran are cut to zero, the international waterways are not going to have the same security as before, cautioning the U.S. against further raising pressure against the Iranian government. Other than that, in unusual facts this week, an operator of global network of radioactive particle sensors says that 2 Russian sites closest to the mysterious explosion went offline this week after days of the recent blast, followed by 2 more. The suspicions that Russia tampered with them. Brazilian's President Bolsonaro is accusing NGOs of burning down the Amazon rainforest to hurt his government and his opinions on the climate, his position on climate, I should say. There's been a global outcry about the wildfires on social media in the eastern area of Bolivia. There's burned down now over 450,000 hectares of trees, of land. And a lot of world leaders, this is actually very hypocritical, world leaders are worried about the Amazon rainforest. There's actually more, based on stats, there's actually more fires right now in the country of Angola, which is literally this compared to Brazil, right? There's over almost 7,000 wildfires in Angola. There's almost 3,400 in Congo, while there's just 2,127 in Brazil. There's also an out-of-control wildfire in Gran Canarias in the Canary Islands in Spain that affected 9,000 people that caused them to evacuate from 8 municipalities. It even reached a national park. Mexico posted a Q2 current account surplus of just over $5 billion thanks to a depressed currency and weak consumption. It's the largest surplus since records began in 1980 and one of the first surpluses since Q2 of 2010. And a plunge in global coffee prices the coffee prices are at their lowest point in the last 13 years. It's actually helping the top 2 producers, Brazil and Vietnam, overtake productivity growth in places like Colombia, Central America, and Africa with the use of mechanization and other new technologies as well. So they have to become more efficient in order to make a profit. That's the news for this week, guys. Let me know if you guys have any questions. Don't forget to subscribe, and we'll see you next week.